NetBix has seen traders come and go over the years, and we've been able to see a number of recurring themes in traders in regards to their trading edge. We also believe that it's possible to recognize certain trader types whereby personalities broadly conform. Therefore, their strengths, their weaknesses, the things which they're able to do with ease, and the challenges they'll likely face can often be identified by the recognition of their type. And of course, there are going to be crossovers between types, and also individuals will have specific traits that are unique to them. But thinking like this can be a really good starting point. Now, one such trader type is the kid in a candy store. Simply put, this type of trader wants to explore everything new and exciting to them. Every new system or indicator has them jumping about as they love finding out about different approaches that traders can take. And while a healthy interest in these is certainly a good thing, there is a point at which it becomes detrimental to the trader. It's good to have a broad understanding of how different market players are trading. It's also good to have the ability to select effective parts of these alternative approaches to bolster your own method. And it's good to recognize how markets shift over time and how therefore some methods will dwindle in their effectiveness and some experience a greater degree of success than they previously did. But if this type of trader is not successful, and often will never be so, depending on their definition of success, of course, there's a distinct danger that with each new thing, rather than it adding to their knowledge and experience, it becomes the sole focus of their efforts. The problem is also that not every trading system available has a true edge in the market. And even then, overall, an actual trading edge is really quite small in today's markets. When looking at an edge with your system, ask yourself why something should happen when what you have determined as a signal occurs. Now, a trader will have the best of intentions, but will oftentimes simply jump to another method, and they will have to prove that that one has an edge as well, and that's going to take time. And during that time, the losses will pile up as this trader tests and trades the system. So what happens next? The last thing, which was going to be the latest and greatest in their quest to succeed, gets dropped in favor of what's now really going to be the winning formula. So what is it that drives this sort of defining behavior in certain people? Why are so many unable to just buckle down and work with what is right in front of them? I think it's a manifestation of the fear of failure. Don't get me wrong here. They believe to their very core that it's possible to make it as a trader, and to think otherwise would be a betrayal of reality as they know it to be. But they haven't found anything which they have been able to make successful. As they use a system, they find imperfections that they initially didn't see that makes it less appealing. A deep-seated fear of failure means that at any level of concern about an approach forces them to explore alternatives, as a failure is simply not an option to them. They want only the best. They believe that success is possible, and the rush of excitement and optimism when they find a new technique masks their misgivings about their own ability to succeed. They don't want to fail, and they don't want to face their own demons. Because they're looking for immediate results, they often skip over things like psychology and money management in favor of finding a trading solution which simply makes them money. But a system or indicator is just one part of a long-term successful trading career. A trading system that has an edge is not the only key that you need. So whatever the strategy, unless an individual is willing to get their hands dirty with the less glamorous side of trading, they will likely never achieve consistent success. And so to overcome the issues a trader like this experiences, it's perhaps even more of an imperative than with other trader types that you have to change your trading mindset. You must first realize that by the very nature of trading, every trader will take regular losses as a matter of course. And oftentimes you will have a string of losing trades. Understanding that you have no way of being certain when those losses will come, and therefore the importance of being true to the execution of a strategy and trade plan with a proven trading edge, is absolutely essential to your success. You must trust your trading system and therefore your trading edge to truly find the success that you desire. And this is what trading day to day is all about, not chopping and changing as you just go along. The trouble is that people don't see this from successful traders. Why would they? Most systems are not sold on the merits of how effectively they take their losses, are they? But in fact, it's these kinds of details that have the potential to determine the success of a system in the live markets. Not only that, but some of the most important information that can change your level of performance is staring you right in the face. Trading statistics about things such as success by the time of day, trading errors, and how a market moves subsequent to your exit can have a huge impact on the level of performance of a strategy. The issue with stats is that without a well-planned journal, which you do have, right, this data either becomes so time-consuming to gather that a trader won't want to tackle it, or it's just lost entirely. So if you're this sort of trader who just can't resist new and exciting systems and indicators and quickly move on to the next, maybe it's time to step back and think how much effort you should really be putting into this part of your trading. There are many different traders who make money using differing methods, and there are many different traders who lose money using differing methods. And so by focusing on trading strategies and indicators alone, you're missing out on other really important aspects that could make the difference to your performance. Find a method and then work with it until you have enough information to understand whether it works or not in terms of really being an edge. And if you still get all excited by investigating new ideas, go ahead and do that. But instead of just dropping your current method, figure out whether there's anything that you can borrow from the new techniques in order to support how you already trade. Once the markets find a consolidation area, you now have the opportunity to play a support or resistance holding or failing type of play. 4 types of trades, and there are literally hundreds of ways that you can take advantage of these trading opportunities. In this chart here, there's a move that we see time and time again because it's the nature of the markets. What occurs here is during the markup phase, that big green candle attracts the eyes of traders who jump in the move. And these traders are actually late to the party because more astute players are in the move prior to the break. You'll notice in the accumulation area, immediately prior to the break, we have price sitting up against resistance in a 2-candle range. This is an opportunity for a trade where you think one of 2 things will happen. Number 1, resistance will hold and you play a short back into the consolidation. Number 2, resistance will fail and price will rally to the upside. And while some traders will use a rate of